right, we are back. Nadlin Forum Podcast Daily. Thanks for joining us, everyone. I'm Ruby, as always, and I'm here with Lior to chat about a topic that's almost, well, shockingly, stable right now. Mortgage rates. You know, I keep checking my news alerts expecting some wild headline, but nope, it's all pretty chill out there. Lior, are you seeing the same thing from your side?
Yeah, Ruby, I'll tell ya, it's kind of rare. Mortgage rates wrapped up last week, basically unchanged. Most lenders just left their pricing where it was. And honestly, that's not what we usually see, especially when the bond markets had some movement. Usually any weakness in bonds and boom, rates nudge up. This time lenders just held off. They had some cushion left from that big bond rally late Thursday, so no sense adjusting, right?
Exactly. It's like for once in this wild market, lenders could take a breath. Normally they do these midday rate sheet changes if things get crazy, but with that leftover improvement from the previous rally, Friday's slight dip in bonds just soaked it up. No panic, no need for adjustments. It's honestly one of the calmest stretches we've seen since, late 2022?
Yes, since late 22 for sure. And it's not just the technicals, it's also what's not happening. We just finished talking a few episodes ago. Remember when we said the government shutdown means economic data is basically on pause? When the usual numbers aren't coming in, no one's sure what's next. So the market just takes a break. Here in New York, I'm seeing deals slow down right after big headlines stop. Both buyers and sellers kind of wait and see.
Oh yeah, it's the same vibes honestly everywhere, I think. You get this rare breathing room that almost feels wrong, but it's just that no new Fed statements, no CPI, no jobs bombshells, so lenders and borrowers have this artificially stable period. It's almost like the market fell asleep at the wheel, but in a good way.
Yeah, it's like catching your breath after a sprint. But, we should remind everyone, this doesn't mean things will stay quiet forever. The game could change real fast as soon as the data starts coming out again.
And for folks out there actually shopping for a home or thinking about a refi, this is sort of the window you're hoping for, right? I mean, we always say act when rates dip. But right now, rates have just set up camp near their lowest point in 3 years. So even if you missed last week's number, it's not like the door slammed shut. Actually, let me tell you, because this made me laugh, I was one of those people frantically calling my bank, worried I'd missed that sweet spot. Turns out I could have had a second coffee. The rates didn't budge.
That's the beauty of it, Ruby. You're not the only one. We've got clients who keep checking every morning, like they're waiting for sneakers to drop or something, only to find, nope, still sitting right there. The kicker is, even just a little drop right now, just a few basis points, can mean thousands of dollars saved over the life of the mortgage. Those with strong credit, big down payments, owner-occupied homes, those are the borrowers getting the headline deals. Lenders know business is slow, so they throw in special promos, underwriting incentives to get the ball rolling.
Totally. And even if you don't tick every box, like, let's be honest, not all of us have a 750 score and a suitcase of cash, you can still find good programs out there. I feel like lenders are sort of trying to keep things lively with little fee breaks and deals, almost like cafe loyalty cards, but for mortgages. Actually, I think refinance volume picked up back in October during the mini dip, then sort of not plateaued, but steadied out as the improvements slowed down.
Exactly. It makes sense. People got used to wildfire swings in rates, so when things are this calm, people wonder, is it worth the refi now or should I just chill? I usually say, if the numbers work now, don't overthink it. This window doesn't last forever, right?
Which is a perfect segue to what could break the calm. I know everyone's looking at the next round of economic data, especially that consumer price index and jobs report that are delayed right now. Once that backlog hits, watch out. We could see rates zig or zag real quick depending on what those numbers tell us about inflation, labor, the Fed's mood, you name it.
Yeah, and the moment the government shutdown ends, all those numbers will drop at once. Lenders are on edge a little. They remember how quick things can change. If inflation looks higher, or if the job market surprises, suddenly the Fed's tightening or relaxing and rates could shoot up, or possibly keep trending down if data is softer than expected. That's the kind of volatility that turns waiting borrowers into frenzied callers overnight.
Right, and honestly, it makes me wonder if borrowers are getting a bit too cozy with this calm. I mean, do you think we'll see a fresh wave of refinancing if rates take another dip? Or are people just kind of numb to it after the last few years?
I think, well, you see it in investment circles for sure. There's always this group that tries to time these volatility spikes, hoping to catch the bottom. Sometimes it works, sometimes it doesn't. I tell people, don't get greedy. If you see a rate that makes your numbers work, take it. Because news can flip in a hurry. Remember what happened last time inflation surprised everyone? It was like a stampede. The market is only catching its breath because the headlines are paused for now.
Yeah, and look, we'll be watching these reports as soon as they drop so we can keep everyone updated. All right, that's it from us for today. Lior, thanks for all the insights, as always.
Thank you, Ruby. Always enjoy chatting with you. And thanks to all our listeners for tuning in. Stay smart and get in touch if you have any questions at all. Talk soon.
Catch you all next time on Nadlin Forum Podcast Daily.